Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the first week of October, October 3rd through October 7th of 2022, where we'll try to share with you why you shouldn't fear October. So we got through September, and again, we'll talk about strategies. We'll do our market analysis. We'll talk about trading strategies, trading ideas, etc. Why you shouldn't fear October. And beach bum traders don't fear trading in any month, right? So we'll go ahead and get started. Thank you, Ollie in the Bay, again for joining us for the live stream. Glad to see you. Hope you're doing well. So here's our Google document with our notes for our part one of our weekly trading game plan, and you should be able to find the direct link to this Google document with these notes in the description box below, and also to the public Google Drive folder that contains these game plan notes and many of our previous game plan notes. So it also includes links to all the references, tools, etc. that we use for our weekly trading game plans. Good morning, good Saturday morning, the blind trader. Thank you for joining us. Glad to see you again as well. So there's several reference links in here on what's called the October effect, and it talks about the perception that October is a month for market crashes, why people fear October, and what we did is we packaged up our previous discussions on the October effect and why October is perceived as a month of market crashes, and we put that together in a new unlisted video. And as a bonus for watching this game plan, you can get early access to that separate video where we review those articles in more detail, called Why You Shouldn't Fear the October Effect. So I'm not going to review those specific articles again. You can view that, and if you were around last year for October, pretty much the same conclusions still apply. So again, you can listen to that where we go over these articles and why you needn't fear October, what the October effect is in that standalone video. Good morning, Flip of the Shippa. Thank you also for joining us for the live stream. Good morning, Walter Lyons. Glad to see you all. Thank you for joining us. I would like to go over this article. This was a new article that just came out called It's the Worst September for a Stock Since 2002, what that means for October. So I want to quickly show you a few things in this Market Watch article. And again, you can access this article directly in the notes. There's a link to that article, and I might put that in a comment after the fact. And I'm going to zoom this in a little bit. Hopefully we can see it a little bit better. So they talk about, how this September was the worst since 2002. And last month we talked about, why September is perceived as the worst month for investing. And we discussed strategies on how to survive, how to trade September. And hopefully you made money in September. Again, we've been talking about the nature of this bear market for quite some time, and strategies, how you can make money in bear markets like this. So again, I won't go through all the details, but what I did want to review in detail is there's a number of statistics. In this October, we had a significant drop. We can see S&P declined 9%. The Dow declined over almost 9%. The NASDAQ declined over 10%. And then they have some statistics about years, Octobers in years where the indices declined more than 7%. I thought that was very useful. And again, a reason why we don't need to fear October is in this case, you can see in years where the S&P declined by 7% or more, October actually outperformed in those months. So those years where the S&P fell 7% or more, October saw a median gain of 1.81%. So similarly, if we look at the Dow, in years where the Dow fell by 7% or more, October gained by a median average rise of 0.37 and median gain of 0.79. So similarly for the NASDAQ, following a September drop of 9% or more, October saw a gain of 2.9% or better. So again, when we have a really bad September, October tends to outperform. So again, another reason why we titled this "Why You Shouldn't Fear October." So again, you can read this article in more detail. I thought those statistics were very positive. So again, reasons why we need fear October. So I thought I'd share that with you. I hope that helps. Again, allay any fears of trading in October. So now we'll jump into looking at how the market ended up September. It was end of September, end of quarter. We'll see how it ended up. Again, you saw in that article it was the worst September since 2002. So we know it was bad. So um, then again, we want to look forward and strategize, okay, how can we make money in October? So here's the homepage of FinBiz. We can see how the markets ended up on Friday. We can see they were all down, tried to make an early rally. We saw this several times during the past week. Early on, the indices would try to make a rally, they'd fail, and we'd end up with a decline. We also see a pretty steep market on close, down candle there, so very bearish at the end of the day. See more decliners, more new lows, very few new highs. Most almost 88% below their 50-day moving average, and about 86% below their 200-day moving average. So again, even though the sentiment's showing bullish, I would interpret all that as bearish. We see in the heat map almost everything was red except for real estate, and a couple spots here and there. And we'll look at the sectors in a little bit as well. We'll talk about the sector rotation that we're seeing and how we can make money trading that strategy as well. So we see some of the news, a lot of talk. Close out a losing week, month, and quarter. We look at the futures right now. We saw oil steeply decline. It's now below 80. Natural gas also declined. Now it's below 7. Gold, we'll see in the futures. Looks like it bottomed and swung up. We'll see if it'll continue on its upswing. And we saw all the markets decline. We also saw the Treasury yields push back up. We see it's heavily inverted. We see the short end is 4%, and the longer end is pushing up towards 4%. So the euro actually made a little bit of a recovery, and we can talk about what's going on with the British pound and their essentially quantitative easing with their tax cuts. So we also saw it bottomed and then bounced back up. They're starting to buy bonds to prop up the British pound. So now let's look at the groups, the sectors, the industries, which is quite interesting. We're seeing a lot of sector rotation. Again, something I mentioned in our Discord that I suspected is yesterday was the end of the quarter, end of the month, and I suspected a lot of fund managers would be trying to both reposition to show a positive return when they report their numbers for the quarter, as well as show that they were in the, quote, good stocks at the end of the quarter. Now, just again, none of this is financial advice. I'll put that banner up. We're not financial advisors. These are my opinions, and they're for education and entertainment purposes only. But I will tell you, I suspect that, again, as yesterday was a risk-off move from the fund managers, now it's a new quarter, and they're going to want to show a positive return for the upcoming quarter. So I suspect they may add some risk with a higher return early in the quarter, again, to try to get some what they call alpha, to outperform for the quarter. So we might see some risk on from some of the fund managers to try to go into a higher risk reward profile so they can show some alpha. So we'll see if that pans out. But it doesn't surprise me as we end a quarter and go into a new quarter that you see this same type of behavior. So we'll talk about that again as at the end and beginning of each quarter. So good morning, Nug M. Thank you also for joining us for the live stream today. Good to see you. Hope you're doing well. So here's the groups tab in FinBiz, and these are the sectors. So this is interesting because, again, we see on Friday the only outperformers, the only greens were real estate and basic materials, and then energy was one of the least underperformers. And we see technology, consumer defensive, consumer cyclicals were the worst performers. Now, if we go to the week, you notice real estate's near the bottom. So again, I'll talk about this for just a couple minutes. But what I think we're seeing is people rotating into the bottom performers, and then seeing that the potential for some alpha exists. So on Friday again, we saw they took real estate, which had been hammered down during the week, and they pumped money into real estate. Same thing with basic materials, energy, and we'll talk about the energy and basic materials are a recurring theme, but watch for that type of rotation. They've tried to do it with technology a couple times. Particular days, they'll start pouring money into technology, try to run it. So I think we'll talk about this more in strategy as well. I think it's a good strategy to see what the underperformer is for a given day and see if money starts pouring into that sector the next day. So again, for the month, we saw real estate was the worst. Basic materials and energy kind of in the middle. So, and longer term, the only real positives have been energy. So energy is the long-term theme, and going forward, they've been rotating money in and out of energy pretty consistently over a couple day period. So I hope that all helps. So now we'll look at industries, and it's also very similar. You see the same type of rotation. We had seen gold and silver had been hammered down, and look at the top performer for Friday. It was silver. Gold did pretty well. Now what we want to do, and REITs had been pounded down, and now they were the outperformers on Friday. So again, you're seeing that sector rotation, money flow from the worst performers and pouring money into that to try to get some return. So if we look at the worst performers from Friday, some of the things that we might see get some attention going forward, and you're going to see tomorrow in part two is I'm particularly looking at aluminum, and we'll see why, and we'll talk about that further in part two. So again, I hope everyone will come back for part two of our weekly trading game plan. In part two of our weekly trading game plans, we apply all of our market analysis strategies, trade ideas, and we pick individual stocks to put on our watch list to trade for next week. So again, we'll talk more about individual stocks in the aluminum sector and maybe some of these other sectors that might provide us with some opportunity tomorrow. So again, we saw for the week, silver, gold are turned around. Uranium, we've been watching uranium. It's been bouncing up and down along with energy. And again, if we look at the worst performers, real estate, some retail, etc., utilities have been bouncing back and forth as well. So, and you see silver, gold for the month, they're starting to outperform. So again, we kind of looked at that bottom, and it looks like it's swinging back up. Hopefully that momentum will hold. So, okay, now let me take a drink a second, and we'll look at the economic data that we got from last week and talk about what that may mean going forward. And I'll click the whole calendar up a second and let that load. Also, just a reminder that as this data comes out, I tend to grab it from investing.com and I try to post it in the Surf the Markets channel in our Discord. If you're not already a member of our Discord, it's free to join. Highly would love to have you join in the conversations. Again, as this economic data comes out, I will try to post it. I post a snapshot from investing.com, also the raw data from investing.com, as well as any other observations that we'll talk about with the futures. I post that in the Surf the Markets reports channel in our Discord. Again, free to join. You'll find an invite in the description box below, and we'd love to have you join us and work together as a BeachBum trading community to help each other out with our success in trading. So Monday, Tuesday, again, I didn't see anything exciting, but we'll look at the whole calendar in a minute. You can see mortgage rates are up 6.5%. There's talks about mortgage rates going to 7% because of the increasing interest rates. See wholesale inventories, much higher than expected. Again, we talked about, double ordering, stuff like that. So that's going to bode ill for retailers who have gluts of their inventory. They're going to have to discount. Again, we've been talking about this for a while, so we expect to see, and we've seen this in a number of retailers. I guess Bed Bath & Beyond just came out. I think some other retailers, and they're reporting, poor earnings, and part of that is because they have the wrong inventory and they have an inventory glut. Home sales, again, we've talked about the housing market being in a recession, so we saw pending home sales worse than expected. Crude oil inventories, this was kind of interesting because it was expected to rise and it dropped, so the inventories of oil actually decreased, and you saw the oil price still decreased. So again, there's some discontinuity now between supply demand and the price. Again, supply decreased, and where there's also talk now of OPEC further decreasing production, and still the price of oil is decreasing. So again, there's some discontinuity there when oil started falling, and natural gas as well. We heard about the Nord Stream pipelines are both out of commission right now, and yet natural gas is falling. So again, there's now a discontinuity between the price and what you would consider the macro supply demand. But again, as a trader, you gotta follow the price, right? If it's declining, then that's the direction we go until it turns around. So same thing with gasoline inventories dropped. Thursday, we got jobless claims data, and even though it was a little less than forecast, it's still pretty much in line. And all this data says that the jobs market is still resilient. So another reason the markets are declining is they're expecting the Fed to remain aggressive hawkish, and that's what we've been talking about for a long time. So. PCE, again, price consumer expenditures was high. Again, the market didn't like that. That means inflation's not really coming down yet. I thought this number was also significant. Something to take note of is corporate profits are declining. They're lower than expected. I expect, again, my opinion, not financial advice, but I expect when we start up earnings season soon again, that earnings for Q3 are going to be pretty bad. So just be prepared, particularly in areas like retail, etc. We'll talk about strategies for particular companies, but again, expect earnings to be bad unless they do some financial engineering, like a big buyback to prop their earnings up, which they can do. So we saw also GDP was it's negative, so we're in a recession, like I've been saying. Initial jobless claims was low, again says the employment market is resilient. And then again, another instance where supply demand of natural gas is somewhat divorced from the price, is the storage rose quite a bit, and the price is continuing to drop. It's still very volatile, but it did drop significantly. And thank you again to Walter. I think he posted that news out in our Discord before I even got to it. So Friday, again, we got core PC. It's still high. It says, inflation's not coming down. So again, the Fed's going to stay hawkish because their number one priority is to kill inflation. So everything we hear, we've got Mester, which is an FOMC president, coming out, and she's expected to be pretty hawkish, particularly towards inflation. So I expect the same message, to kill inflation. Also, PMI, Chicago PMI, so manufacturing data out of Chicago was bad. So again, that's a recessionary indicator. And we saw consumer sentiment, which isn't bad. It's actually been improving a little bit. You see overall consumer sentiment. It was a little worse than expected, but still not as bad as it had been. Inflation expectations are a little higher, but not significantly. So again, the consumer is relatively resilient as well. So again, other reasons why the Fed can afford to be hawkish is they're not concerned about employment, recession, or the consumer much at this point. The main priority is to kill inflation. So now I'll jump over to the calendar and investing.com. We can see a little bit more of the details from last week, and then we'll look at what economic data we've got coming up for this week. So I'll just see Monday, Tuesday, again, not much. We've got all these Fed talks. Durable good orders was down. So again, that's, negative for the economy, recessionary. House prices are coming down a little bit. The Fed will like that. They want house prices to come down. So again, then we talked about Wednesday, Thursday, Friday. So let's look at what's coming up next week. So we got some manufacturing PMI on Monday, ISM, more manufacturing data, and all these will tell us if it comes in below forecast. It's more indications of recession. Got factory orders. JOLTS again is open job positions. That should be decreasing. Well, it depends if they're filling the jobs or if more people are getting laid off. So the Fed will be watching that a little bit. I expect the job market to stay resilient until the recession gets much worse. So we've got mortgages going up, ISM data, etc., and then standard oil and natural gas inventories. And Thursday we get jobless claims data again. So again, we'll see how the job market's doing. And then on Friday, we get actual payroll data. So again, this is typically the non-farm payrolls. This is the monthly. This will be for September, the first read for September. So again, this is primarily what the Fed will be looking at in terms of the job market and see if it's worse than expected, better than expected, et cetera, and expect the market to react to that. The market's, a little touchy right now, so anything that indicates that the Fed's going to stay hawkish, which is what we expect, is downward pressure on the markets. So I do want to jump back and look at the indices. I skipped over that. And the next FOMC meeting is not till November. We don't have any FOMC meeting in October. So another reason why not to fear October is we don't have an FOMC meeting. So they won't be raising interest rates specifically in October, but we expect early November they're going to raise interest rates again. We have very little earnings, so pretty much wrapping up this earnings season. You can again access who does have earnings this week via that link in investing.com, and or I'll show you where in Webull. But again, I do want to go back to FinViz and look at the indices real quick. We kind of know it's no bad. See the decline. It's way below its average, way below the trend line. we zoom out again, it broke down through its moving average, broke down below the June low, and so it's in decline. 359, yeah, it's even below its 52-week low. So it made a new 52-week low, the SPY did. So very bearish. Look at the Qs. They're all going to look the same, right? Steep decline, very negative, broke down below the June low. We'll talk about tomorrow VTI. VTI also broke down below its 52-week low, and that's the total market. So look at the Dow. It's going to be about the same. Yep. New 52-week low. So again, all very bearish. We've been saying, bear market since the beginning of the year. We're still in a bear market, so we're using our strategies to make money in a bear market, sell the rips, trade the inverses. Again, we've been talking about strategies in a bear market and how to make money in a bear market all year. So hopefully those are helping you, and hopefully you're making money in this bear market, just like in any kind of market. So IWM, again, held up a little bit better, still broke below its low, still a negative morning star type candle, but it didn't, didn't cascade down like some of the other indices. Look at the VIX. I was surprised the VIX didn't really spike up yet. It's still in the 30s, but we haven't seen, a spike up like March. Hasn't even hit the June high yet. And we'll talk about our strategy for playing the VIX. And we also see it didn't really, even though the market was declining significantly last week, the VIX really didn't go up a lot. In fact, it was going down most of the day yesterday. So you will hear some people say that is some indication of a bottom, is when the VIX is going down while the market is going down. So that's something to look for. So now let's look at the market screen very quickly in Webull. And again, Webull's still offering their 12 free stocks. Again, Webull's our favorite trading platform. If you're not already using Webull, you can get, again, 12 free stocks, each valued up to $3,000 just by opening an account, depositing $1. So if you're not already using Webull, you can find our affiliate link in the description box below. This is the online browser version of Webull, and this is the market screen. I like to use this for some analysis so we can see the histogram of decliners. Again, there were many more decliners, but the percentage of decline was small. There are only very few at the tail, very, very few high advancers. Look at the inflow. This is interesting. We had a crossover where the NASDAQ was outperforming and then underperformed after about midday. So that's an interesting reversal, and that probably is where they were trying to run the market up, and then it dumped, particularly into the end of the day. Here's another place where you can see the earnings calendar, upcoming earnings calendar. You just hit calendar and earnings. You can also see dividends and splits in Webull. And again, it'll tell you if the earnings are after market close or before market open. So that's helpful. And I'm just checking the chat. And yes, Walter, we'll talk about dollar strength. And we've talked about strategies for trading in the dollar strength, whether it's going up or down, and how to make money in that. And we'll see where it's at in the futures in just a minute. So, and thank you also, Walter, for your positive comments. Greatly appreciate that. Let me see if I can pop that up. Thank you. So let's look at the best performing industries for the week, since we know Friday was generally pretty bad. So we see coal, uranium, again, energy, oil and natural gas. Again, energy was positive, and again, that's a recurring theme. Energy is going to be one where the they're doing the sector rotation in and out of energy. Good opportunity, particularly if you're a shorter term day trader, scalper, momentum breakout trader. Energy is a good sector. It is very volatile, so you need to be careful. But I know a number of our fellow BeachBum traders are doing quite well scalping energy, various sectors. So metals and mining, again, we saw gold, silver look like it was making a recovery. Look at ETFs. Again, this is going to be Friday, so it's going to be mostly negative. So yeah, we see down on the Dow, short the Dow, short the Qs, short the S&P, up the VIX. So again, for Friday, it ended so negative. That's not surprising that all the bets are down. And again, the industries are probably going to be, except for basic materials, was a little positive. Probably see real estate. We saw a rotation again from the worst performing to the best performing on Friday. So we saw REITs recover somewhat. Financial services been up and down. Healthcare's been up and down. Okay, commodities. See some grain, wheat, lead, silver, gold. And then we're also going to talk in our strategy about bonds because, and I'll leave that to the strategy section. But now there are what's called TARA. There are reasonable alternatives, and bonds is one of the reasonable alternatives. So you see money start to flow into these shorter dated bonds, 7 to 10 years, 3 to 7 year, etc. So. And also, here's the British pound when they announced their quantitative easing. We had a rebound in the British pound, which had been pummeled when they announced their tax cut. So I hope that all helps. So yeah, now we'll look at the futures and then we'll talk about strategies. So, and again, here's the futures chart in FinViz, and I've got a video. There's a link to this video in the notes about how I use this futures chart, but we'll just take a quick look. Again, we see the steep decline. Big red candle broke the lows on Friday of all the major indices. So we see this, bear market, steep decline starting mid-August all the way through September pretty much. We do see these, bull rallies in this bear market. So we can get a pretty, dramatic run up. But again, the strategy, as long as we're in a bear market, is to sell these rips, right? Don't get caught because then we see that steep decline. And they all look pretty much the same. See the VIX, again, it popped up a little bit, and then it just got kind of stuck a little over 30. It never did get that total capitulation. We also don't see a true, capitulation on any of these indices yet. So we could get some, significant downside before it reaches a bottom and then trending up. Again, if you listen to that video on the October effect, etc., I think there's some discussion. Well, I know you'll see the graph as to the seasonality of October, November, December. So in general, again, September is typically perceived as the worst month, and then October, November, December, and we'll talk about the Santa rally going into the end of the year, etc. So things should improve into the end of the year. So again, part of our strategy is positioning for that. Again, we see oil decline. See natural gas had declined quite a bit. It's kind of stuck right around 7, but 7 should be a resistance point. So we'll see if it continues to drop below 7. We see that nice bottom and bounce in gold. Silver had already bounced and headed up. Silver had some nice runs. Copper similarly. So hopefully, these gold and silver will continue. It looks like gold's got significantly more upside left. Silver, actually gold was outrunning silver for some time yesterday. That was quite interesting. And we see all the other commodities. Some of the, they're divergent. So wheat, we've got way up, and cotton way down. Orchards way up. So when we look at our ETFs tomorrow, we will see if there's any opportunities to long or short any of these other commodities as well. So then we see the bonds, looks like they bottomed and are trying to make at least establish a bottom, if not swing back up. So we saw TLT, TMF do some recovery and then declined on the Friday. Was a total risk off move. The dollar popped back up a little bit. Pretty much again, it was total risk off, so everything sold off. Saw the euro recover a little bit. Again, we saw the British pound. It bottomed when they announced that tax cut and then rebounded when they announced quantitative easing. So again, tomorrow we'll look at our ETFs, the specific opportunities, risk-reward profiles, and see if there's any opportunities to trade any of these indices, commodities, etc., with a good risk-reward profile. So let me check the comments in the chat and grab a drink a second, and then we'll dig into strategies for why we shouldn't fear October, how we're going to make money trading in October. So again, I found it ironic that those strategies that I talked about last October pretty much still apply this October. So what you will hear in that standalone video, and also here's a direct link to the game plan from last year, where we talked about why you shouldn't fear October and how essentially we're going to make money while we wait for the markets to turn back up. And again, this was from last October, but again, pretty much everything still applies. Take advantage of irrational reactions to earnings reports. Once we start this next earnings season, if we get an irrational reaction, then that's an opportunity. We talked about dividend paying ETFs and stocks, gold and silver, REITs. Okay, again, those are opportunities. We saw how gold and silver are starting to recover. Back then, this was the start of the inflation, the high inflation, and we're still in a high inflation environment. Also, it's a safe haven, store of value, and particularly all of these things are more resilient to inflation because they're dollar denominated. They go up in value as the dollar goes up. Also, trading volatility. Excuse me. So we've talked in the past. You can long the VIX with UVXY, short the VIX with SVXY. Tomorrow we'll talk specifically about our strategy with SVXY to try to catch a spike in the VIX. We saw it hasn't really. Haven't got that capitulation spike up to 40. Excuse me. Sorry, my voice is a little scratchy today. Also, we talked about scalping commodities, particularly oil. We'll look at the ETFs. We're long USOI. We'll talk about that. You can use Gush or UCO to long oil, drip or SCO to short oil, and similarly with natural gas, boil to long, coal to short. And again, headed into winter, we expect continued volatility in energy. So again, scalping opportunities, and again, until the market really turns around, bottoms and turns around, scalping is probably a good strategy. And keeping your stops reasonable. Play defense. The best offense is a good defense. We talked about that for some period of time. So again, these are opportunities. Also tomorrow we're going to talk about scalping the indices, and we've got these ETFs to long or short all the indices. So they've been steeply declining. A lot of these ETFs are reaching a previous support level. If they start to turn, and you've seen over the past week or so, they've tried to run the indices a couple times and it's failed. So when they're trying to run them, there's an opportunity in the longs, and then when it fails, you can flip it over and do the short of the same index. So, and again, make money going both ways, right? So again, all reasons why not to fear October. There's plenty of ways to make money. Pick your poison. What do you prefer? And again, we'll talk about some others as well. Some we've talked about in the past couple weeks. Uh, Last week we talked about how to make money from the Fed interest rate decision. So we have several videos. One's published, one's unlisted, but you can still access it via this link on how to make money in the rising interest rates. And again, we've been in that environment. We expect interest rates to continue to rise in November, December. Um, just how much and how fast, but we expect them to continue to rise. So here's some strategies on how to make money in a rising interest rate environment. Here's our strategies. Again, this is a currently unlisted video, but you can access it, and it goes over our strategies of how to make money trading with a strong dollar. So again, we saw the dollar's been very strong. It will continue to be strong in a rising interest rate environment. And you can trade, when the dollar's strengthening, we talk about strategies, how to make money when the dollar's weakening. You essentially just flip it over and then trade the other way, and you can make money on a weakening dollar. So what's going to weaken the dollar is a couple things, and we saw this when the British pound, they talked about quantitative easing, but also as foreign governments come out and they start raising their interest rates, the dollar strength, and we'll talk about this in more detail going forward, it's the relative interest rate of the U.S. versus other countries. So right now, the U.S. has been raising interest rates for some period of time, therefore our bond yields, etc., are high relative to other countries. As they raise their interest rates, and their bond yields are going to go up, and therefore some money will start flowing in that direction, and you'll see essentially this escalation in interest rates across the currencies and countries, and that's going to strengthen and weaken the dollar. So again, we expect continued volatility as the countries raise or even lower their interest rates. So we saw China's actually easing. We saw Britain ended up easing. So that then pushes the dollar up or down. So the other thing, we talked about this starting last week, is no more TINA, no more there is no alternative to stocks or equities. I heard a new term they used on CNBC. I like that, TARA. There are reasonable alternatives, are real reasonable alternatives. So I almost titled this weekly game plan something like Welcome to Tara. So Gone with the Wind theme. So we'll see. Might use that. And welcome Tanavir, welcome Spacula. Glad to see you also in the live chat. Tanavir's mentioning they announced they'll start dumping USD. Yeah, that's not surprising. Both China and I think Japan has been selling treasuries, so that's also and getting dollars. So you'll also see that when the dollar gets strong, these foreign countries that are holding a lot of U.S. treasuries are selling the treasuries to get strong dollars, and then that it's more valuable because of the strong dollar. So, and thank you, Specula. Yes, we're doing okay. And yep, we fared through Ian with only wind, rain, couple brief power outages, and thank you to all our BeachBum traders who expressed concern, support. We greatly appreciate it. So again, alternatives. Bonds now offer real returns. Short-dated bonds are now running 4% plus. And even the long-dated 20-year, 30 years are 4%. We talked last week about I bonds. You can get more than 9% using I bonds. There's also, we'll talk tomorrow about a bond-based fixed income fund that is also based on bonds like OPP. And again, those will become more attractive too with the higher yield in bonds. So also real estate, we talked about how that's an inflation hedge, as well as it's an alternative investment to stocks. So again, now there are real alternatives to stocks, so you're going to see money flowing into those alternative investments and out of stocks, and obviously then that affects the liquidity. And if you have no buyers in the market, then the market's going to go down if you have sellers. So also, dividend-paying stocks, are more attractive, particularly if they're beating inflation. But at least it's preserving your capital better than just sitting in cash and getting eaten by inflation. So I think we talked about this before. Non-mortgage-backed REITs like Realty Income, Stag, LTC pay a nice dividend, monthly dividend, so those become attractive. Gold, silver, these ETNs that pay monthly dividends, and we're long in all three of those right now. And then we'll look at other things that might be paying better than a bond in terms of a return. And also last week, we talked about, selling covered calls. So when we're talking about why not to fear October and what are we going to do while we wait for the market to turn up, another way to make money that we've talked about numerous times is selling covered calls against your existing position. So again, if it's a position you intend to hold, at least for some period of time, you can essentially generate your own dividends, earn some money by selling covered calls against your positions. And we've got several videos that talk about how to sell covered calls, and then when do you want to sell a covered call versus not sell a covered call. So again, I won't belabor those, and you can view those videos. So let me see if there's any. If I missed your question, please put it back in the chat, so I can catch it. I'll try to answer it. If I happen to miss your question, please post it in the Discord, tag me, at BeachBum Trading in the Discord, or hit us up in our Facebook group. You can put it in the comments of the video, etc., and we'll try to respond as we're able there too. Good. Yes, we sold covered calls on our TMF as well, Walter. Yep. Yes, this is a strategy we're using to generate essentially a dividend, generate revenue, generate income while we wait for some of those positions to swing back up, is sell covered calls. And then you sell them, sell them when they're going up, buy it back when it comes back down, keep the difference in the premium, rinse and repeat. So I'll leave that question. I did post it in our Discord as well. I'll just briefly If anyone knows of any good swing trading oriented focused daily YouTube live streams or shows, please let me know. Again, most of the ones I participate in right now are more focused on day trading, so I'd be interested in finding some more swing trading oriented live streams to hang out in during the day, which I typically listen to while I'm doing everything else as well. And thank you for that super chat, Spacula. That's greatly appreciated. We appreciate all your support and help. Spacula's been one of our longtime BeachBum traders and one of our greatest supporters, and we greatly appreciate all the support. So thank you again for that super chat, Spacula. So I just wanted to highlight a couple other things while I see if there's any questions I can answer. Just real quick note, there's a couple new trading tool links on our homepage. So Open Insider, Markets Insider. I'm going to dig into those in more detail, maybe even do a video on how to use those particular sites. But again, on our homepage, beachbumtrading.com, bum without the U, under the links section, we have all our social media, our platform, all these tools that we're showing in our videos, and we've added Markets Insider and Open Insider. And again, maybe we'll do some additional videos on how to use those specific sites. And then also we added a new trading psychology forum channel to our Discord. Again, that was a discussion we had last week during our game plan. It was recommended, and we got positive feedback about having a trading psychology channel. Discord, they just came out with a new type of channel called the forum channel. We're trying that out. We'll see if we like it. So please let us know what you think of that type of Discord channel. We can't always change it to a standard text channel if we don't like that, but we can try it out, see how that works for everybody. Again, you can find a link to our Discord in the description box below, also on our homepage, etc. It's free to join our Discord. Please, join in, become an active participant. And again, if you have resources related to trading psychology, please share those in that trading psychology channel for everyone's benefit. So let me see if there's any other questions. If not, I will wrap up. Again, I hope you'll come back tomorrow for part 2. We'll take all this analysis, all these strategies, all these trade ideas, and we will pick our individual stocks to put on our watch list. We actually have quite a few changes, some new additions to our watch list for next week. If there's particular stocks you want us to take a look at, you can ask us in advance. Again, put it in the comments in the Discord, via social media, etc. We can maybe look at them in advance, or join us in the live chat. We'll try to look at them live if we can. And if you want a deeper due diligence on something, just ask us, and we'll try to see what we can do. But otherwise, thank you for everyone who was joining us in the live stream today. Thank you again, Spacula, for that super chat. We greatly appreciate all of your support and all your help. So again, we'll see you tomorrow, same time, 10 a.m. Eastern time for part 2. Again, we'll select our individual stocks. If you're not already subscribed to our BeachBum Trading YouTube channel, we hope you will choose to subscribe. Hit the bell icon, you'll be notified. We do release other videos, educational videos, due diligence videos, etc. during the week. So if you hit the bell icon and you're subscribed, you'll be notified when we release those other videos. And again, we hope you like this content. Hit the like button and leave us a comment. So we look forward to seeing you tomorrow, and have a great rest of your day. Bye.